Hey guys, what's up? It's me, Aaron from Better Traders and also from Coin Bureau Trading. And I'm joined here today with Dan the Man. Dan, what's up, man?
Hey, Aaron. Doing well. How are you?
I'm doing fine. Despite the crazy volatile markets, I'm doing fine. Before we get started, before we get into today's live stream, we have a lot to talk about. There's a lot happening in the markets, but before we do, make sure that you like the video. Make sure that you share the video online, share it on X, Instagram, wherever you post stuff, wherever you crazy people post stuff nowadays. But we're going to be talking about a lot of important up-to-date stuff. So make sure that you share the video, like the video, leave a comment. We have a couple tickers in mind of what we want to talk about, but of course, we're going to be looking at a lot of your comments as well. So I think the first thing to do is kind of have one of those long sighs. I don't know about you, man, but I posted a video earlier my day. You posted a video just a couple of hours ago. Instead of me blabber on first, I'd rather have you share a couple of your quick thoughts, quick takes on what's happening right now.
Sure. So to be honest, I actually think that what's happened, I mean, the markets don't agree with me. That's fine. They don't always do. But I think what's happened over the last 24 hours is we've finally gotten confirmation related to these tariffs. I know that some people are saying, oh, like we don't have clarity there and whatever, but I actually think we do. Like Trump literally came up with that sign and showed the world is like, this is how much we're tariffing each country. And that's kind of what people were waiting to see for a very long time. I think the reason why markets are acting still not so nicely is because they're waiting to see if there's going to be any retaliation. I think that's the real concern is like, is there going to be a retaliation to the retaliatory tariffs? Is it going to be like a tit for tat? Are we going to get a full scale trade war? But the key takeaway for me from yesterday was, number one, that Trump showed this is the tariffs that we're imposing, like this is the final thing, notwithstanding any kind of escalation. And the second thing showing that 10% is as low as we're willing to go. And basically showing that, we're willing to basically negotiate whatever terms are required. And if you guys play nice, then we'll bring the tariff down to 10% rather than 60% or whatever it is. And now we just have to wait and see, what's the outcome of that going to be. And I do think we're going to have clarity around that by the end of the week. That's basically my thoughts over the last 24 hours. And once there is clarity, then we should see markets start to recover, I would say, in the next couple of weeks, which I think fits pretty closely with your thesis of your video from earlier today, if I'm not mistaken.
Yeah. You said something actually in the Coin Bureau Discord server, I want to say a week or two ago, where you were talking about the art of the deal.
Yeah.
And talking about Trump's tactics as a businessman. Can you just bring everyone up to speed on that concept that you kind of shared? Because I think that also plays into what you just shared and what we're seeing unfold before our eyes.
Sure. So I think a lot of people, when they hear the art of the deal, once upon a time when people heard the art of the deal, they would think, oh, that's a great book. I remember that. But these days they think art of the deal that was completely ghost written. Trump didn't write it at all or whatever. I honestly don't remember why I read the art of the deal, but I would say maybe 10 years ago, I read the art of the deal just out of curiosity. I think it was in a phase where I was just reading a lot of books, like best-selling books, and that was one of them. And what I found really interesting is that basically what the book argues is like when you're negotiating, you open up with something that is so ridiculous that no one would ever possibly accept it. And then you say, okay, well then I'll do this thing, which is like, pretty normal. And then the other person, they kind of agree to that scaled back agreement, even though the scaled back agreement is not optimal, it's still better than the ridiculous thing that was initially proposed. So then the person who accepts the deal, they feel like they walked away with a good deal, when the entire time, the whole purpose of that strong negotiation at the beginning was to get them to agree to that level. So for example, you say, I want 100, and they say 100, that's crazy. And then you say, okay, I'll bring it down to 75. And they're like, well, and then they will say like, oh, well, can you do 50? It's like, okay, I'll do 50. But after all, like they wanted 50 the whole time, but they were just, like negotiating, like the person who's pushing for the 100, they wanted 50 the whole time, but they started with 100 to kind of like get them to, negotiate things back down to the level that they wanted. There's a little bit of a butchering of an explanation, but I'll say, Aaron, because I do think that this is something that people will comment, is they say, oh, the art of the deal was ghostwritten. To be honest, that's true. And you can even tell if you read the book that the first maybe like 1/3 or 1/4 of the book, it reads the same way that Trump speaks. So it's like, I make the best deals, I am the best deal maker, blah, blah. The way that he speaks, it literally reads in that way. But then somewhere maybe like 1/4 or 1/3 into the book, you start to get a very matter of fact of like, on this date, this happened, and on this date, that happened. And you're like, okay, well, this is clearly someone else who's writing. So at the very least, I do think that Trump dictated at least the beginning of that book. Whether he wrote it himself, probably not. Someone was probably just copying what he was saying. And, it really reflects the way that he speaks. But the thing is that this art of the deal, this negotiation tactic, that's what's described at the beginning of the book. And I think that even from Trump's perspective, and I've noticed this in other best-selling books, and sorry to go on a quick tangent here, but if you read many of the best-selling books, the beginning of the book tends to be the best part. And then it kind of gets worse and worse as you progress. At least that's what I've noticed from a few of them. So I do think that it was kind of by design, where it's like, I'm just going to open up with the main thing, and I'll let this other guy just write the rest because no one's going to read it anyway, right? That was probably the thinking. But anyway, who the hell knows? That's my thoughts there.
Yeah. Well, let's start looking at some charts. I just wanted to talk about this first, before, to kind of set the stage for what we're all witnessing right now. I'm sure a lot of people are really surprised at the reaction of the stock market. There's also a delayed response to, because U.S. markets will be opening pretty soon. But we've already got a pulse on what's happening, especially because S&P futures reacted right after Trump's news conference and holding up whatever he signed and talking about the tariffs and all that fun stuff. So if you don't mind, I'm actually going to go first, but I need to set this thing back up again. I thought I got it set up. All right, there we go. Perfect. All right, let's see which button. I'm using there we go. Okay, good. I'm all set. All right. Now, the main thing that I'm looking at, and this is going to basically reiterate what I shared in my video just a couple of hours, okay? The main thing that I'm looking at is the fact that BTC, and let me just hide all the extra stuff, because really it's just about price action. While Bitcoin didn't exceed the high here that was set on this nice rally back here last week before the market crashed, basically back down, the reaction and the expectations just before the tariff dump, I guess you could say, was much greater than I thought. I would expect most people to be a little bit more bearish, knowing what's happening and knowing what has happened back in February, back in March. But having a run up before it dumps, I mean, this is market maker paradise for one, but it's just really weird price action. But the big thing that I'm looking at is that I have these resistance levels, and I'm a big fan of resistance fans, but when I have these multiple levels like this, it just gives me more targets before the price actually hits the big one, which is this guy right here. And I'll actually make this a little bit heavier weighted so we can see it. This second line got pierced, and I gauge the strength of trends, whether they're or not whether, but when they get pierced and when they get tested. Test is like when the price comes right up to it and it gets rejected. A pierce is when it actually goes beyond that line, like it did back over here, and obviously where it did right here. The fact is that despite the little bit of a scam run up before the tariff dump, a pierce at this level is actually a really good thing. And the bigger part to me is why didn't the price just dump a lot farther? Well, that tells me that the market is feeling like this is low enough. When we look at daily volume actually did really, really, really well on yesterday's close. It actually exceeded the 30-day moving average. It's just a free indicator. I talk about it a lot, but it's basically just converting the volume that's traded for BTC in USDT, in the quote currency. But this is the first day that we've seen volume exceed the 30-day moving average. And I don't care that the price action is bearish. I'm just happy to finally see some significant volume. Because of that, I'm looking at price action. I'm looking at lots of other metrics like RSI, on balance volume. I'm looking at price action. I'm going gosh, I know this is supposed to be bad news, but when I don't see RSI just plummeting, and when I don't see the price just absolutely dumping lower and lower, but it's holding, it's a little bit difficult for me to feel like this is bearish. I know it is, but I'm looking at this going, I'm not buying the fear. And to be honest, we're also in this weird recovery stage, I guess you could say. So I just want to share one more thing that I want to get your thoughts on it, and you can throw up a chart as well. So back over here in the summer, right? So June 2024, price of Bitcoin dumps from 70K down here to 54K, loses about 22%. And then we get one of these blue diamonds right here. This is from the TBO indicator that I use for everything. It's called the TBO close long. This is telling us that the trend could change, but if you haven't taken profits yet, consider doing that when the price goes back up to this thick green line, which is the fastest moving average. And you see it happens here and here and here. But what happens typically is when the price comes up to it, it actually exceeds it pretty big time. I mean, we got an 11% move up higher. This one's a lot smaller, only 5% higher. This next one is about 9% higher. So I'm used to seeing the price exceed this moving average. And we're also looking at RSI doing really something very similar to what we're seeing right now. It was super overbought. It's taken a long time to bottom out, and now it's starting to slowly reverse here, just like it did back over here in July. Now, I really don't want to see Bitcoin chop for another 3 months, although it's very much possible. But seeing these symbols and this similarity right now is leading me to believe that we should see Bitcoin actually exceed this level by about 5%, which would put us up at 92K. If it goes crazier than that, that'd be 97K. It's not likely, mainly because when I look at price action alone, there's a lot of resistance, price-based support and resistance right here at about 94K because of this close and this open, these wicks right here, this price action right here. But we could even say as low as like 93,500. But 94, 93 seems like a reasonable target for Bitcoin over the next 7 to 10 days. And a pump of 12% seems ridiculous, but we also need to remember that in 1 week, we saw Bitcoin dump 14%. Even the week before that, there was a massive scam wick down 18%. We could see the inverse of that happen. We just need some sort of bullish news for BTC to pump up that high. But that's kind of what I'm thinking right now in regards to Bitcoin's price action. But again, I really want to know what you have cooking between your ears, Dan. And if you want to go ahead and throw up your chart, that's totally fine too.
Yeah. I guess I'll start first. I'll comment on your chart, and then I'll pull up mine. So okay. I completely agree that that's the thing that's very fascinating is that, like you're saying, Aaron, is like when everything was supposed to be super bearish and like, yes, it kind of feels bearish, but then you look at the chart and you're like, I just don't see it, right? Like exactly as you're saying, I was also watching like, wow, like there's a pretty nice pump going up into this, which of course is sus, a little bit sus. But I found it interesting that, for me, like I'm living in Europe. So when Trump was making all these announcements, I was already asleep. And when I woke up, I was like, oh man, I bet it's going to be like 10% down. And there's going to be all these people just like chewing me out everywhere saying like, how can you be bearish? And I wake up, I'm like 83K. I'm like, that's okay. Yeah. I'm like, that's not so bad. Seriously. And of course, like, some altcoins have been struggling a little bit. I guess we'll get to those in a bit, but I will share my chart first though, because I'm in complete agreement in terms of the pump percentage and in terms of the level. Just let me try and share here. I'm in complete agreement. Can you see my screen?
Not yet. Here we go. There we go.
Yeah.
Yep.
Cool. So I guess I'll start by explaining why I'm in agreement. So of course, as you may or may not know, Aaron, as some viewers may or may not know, I'm a huge fan of the Bollinger Band moving average. In my personal opinion, it's the only indicator you need. But that being said, Aaron, like how you walked us through all those different ones, it's like it just shows you how refined and how much more of a better view it gives you when you do have all those extra indicators, right? But if we're just looking, especially on longer terms, and just to get a sense, like roughly of like where we could be headed, the Bollinger Band moving average on the weekly here, lo and behold, is right around 94K. And ever since we saw Bitcoin fall below this Bollinger Band moving average, and if you check, many major altcoins have a similar chart where they fell below this key level. It kind of signals like a short-term bear trend. So like when Bitcoin fell below that, it's like that tells you that we're entering basically like a short-term bear trend. But the thing is that, and I'm sure that of course, Aaron, something you probably mentioned many times before is like when you break above or below a key level, it's normal for there to be a retest of that level. So in this case, we broke below this Bollinger Band moving average on the weekly. So to see a retest of this level at some point, I think is, not that it's guaranteed, but I think there's a high chance of that happening. And that happens to be, like you said, around 93, 94K, which is exactly what your indicators are showing, albeit to a much more refined degree than what I have here on the Bollinger Bands. But the thing that's really interesting, of course, is what I think is going to happen that we're going to see a rally back up to this Bollinger Band moving average on the weekly, not just for Bitcoin, but for many altcoins in the next couple of weeks. And I think that the result of that is that many people will say, oh, it's a dead cat bounce, it's a sell the news event or whatever. And then we will see probably when it hits that level, probably another pullback, right? Maybe a pullback down to 90K or 88K or some other key level, right? And then from that stage, that's when we have to wonder, okay, now do we get a continuation higher, or does it get rejected? Is the rejection genuine, and does Bitcoin keep rolling over along with the rest of the crypto market? So that's really like the only thing I wanted to share there. But I guess the other thing I'll mention that I think a lot of people are wondering is like, well, how low could Bitcoin go? And I'm curious to get your thoughts on this, Aaron. But the way that I look at that is I just zoom out all the way to the Bollinger Band moving average on the monthly. And here, like this line has basically been respected, as you can see, ever since Bitcoin started rallying in late 2023. It's held above this level. Whenever it's below, it's in a bear market. Whenever it's above, it's in a bull market. So clearly Bitcoin is still in a bull market. And in my view, like Bitcoin could theoretically drop as low as like 65K and it would still be fine. Of course, the key thing to keep in mind that with the Bollinger Band moving average, of course, it is a moving average, so the price does change, along with the price action. So in a month's time, let's say by the end of this month, this could be closer to 70K, which would be more in line with this resistance level that you can see just like, without having to draw anything. You can see that there's a pretty strong support and or I guess from the upside, there's pretty strong support here around 70K. So for the monthly Bollinger Band moving average to inch up towards that level, and then potentially for Bitcoin to even just like wick down and touch it, that's something that's possible. But I think we're just have to cross that bridge when we come to it. In the shorter term, I do agree though that in the next couple of weeks we will see a spike up to 93, 94K, and I think we're going to see a similarly big move in altcoins as well. But I am curious, Aaron, to get your take on how low you think Bitcoin could go if things just fall apart. For example, we get reciprocal tariffs. How much more do you think Bitcoin could roll over from here? I guess I'll stop sharing just on that.
Yeah. First up, I see some comments in the chat, which is always helpful, getting feedback. People saying that Dan's volume is a little bit too quiet. I did adjust it and turn it up a little bit. Okay. So if the volume seems a little bit more balanced between us, let us know. If he's still too quiet, I can actually adjust your volume on my side, which is wild.
Yeah, please do.
But let us know, okay? Because we want to make sure that things are sounding decent. We want to make sure that you guys can hear us well. That's important, okay? Yeah, let me go ahead and share my screen. It's a real easy answer. Here we go. Allow. Cool. Okay. I keep doing that. Oh, there, you can see it. That's right. Great. Okay. All right. Volume is fine. Just different mics. Sure. Thanks, Materia. All right. So easy answer. If Bitcoin were to fall, the place where it's going to fall is going to be actually not that guy right there. It will be, to make it easier, we'll just do this, draw a new one. It's going to be right here. So it'll probably be down here to 73,777. Which is great. Nothing like a nice lucky 777. But really, it's not really because of the Fibonacci levels here, but it is interesting at how well it's worked out to identify support and resistance levels right now. But the main reason why is because of this price right here. So we have this high right here on the week of March 11th, 2024. And when we saw Bitcoin starting to rally, let me just change the resolution to the daily time frame. Just give me a quick second. We saw on that rally in November, there was just a little bit of a tap right here. I'm sorry, it's late October. But this level, 73,777, was very difficult for BTC to break above for quite a while. We got kind of close to it, rejected. Not so close, lower and lower and lower, until finally we get a test before going lower. This right here to me is plenty of evidence to say if Bitcoin's going to fall down from where it is right now, which it would be a very unpleasant move of 10/11%, this level should hold. If it doesn't, for me, it's going to be a much sadder day in Moon and Papa land. We'll say that. It'll definitely be extremely bearish. We're going to see markets puke, absolutely puke. It might be one of those situations where the price dips below real quick, but it comes back up. But piercing this support level changes everything, because everything down below here this is all bear country. This is all like not so great stuff. And then we start going, my mind would instantly go, okay, If that breaks, then we're in a bear market. And if we're in a bear market and I'm expecting something like an 80% pullback from here, then, I mean, you asked the question, so here's my answer. Then we're looking at something that could fall down maybe even to 16K if this is the top. If this breaks, for me, this is not a good sign. This is like very, 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 very bad. So I am expecting whatever it's going to be, whenever it's going to be, whatever the high is, anywhere between 80 to 85% of a drawdown for the next bear market seems reasonable. Now, it would be extremely weird if we are at the start of a bear market, in my opinion, because so many indicators and so many metrics disagree that this is the top or this right here was the top. But let's say that the top is going to be 125K, which I've seen. It's amazing. I don't know if you've been paying attention. People's estimates initially for the bull market, they're saying, oh man, Bitcoin's going to go up to $400,000. It's like, okay, so an 80% pullback brings us down to 80K. That's fine with me. And then I see people saying, oh no, it's not 400,000, maybe like 250,000. That seems like a good target. It's like, okay, well, an 80% pullback down here to 50K. I could stomach that. But now that we see the targets get lower and lower, and my personal target is actually 176K. And keep in mind, I don't think this is going to happen until November. And then it will take probably, it's going to take probably a year and a half. So thinking about 500 days or so. So probably here. And this is way out and doesn't even have a date for it. But it's going to be rough. And we're going to probably fall down here. I mean, that's my low for the next bear market, is basically 35K. We're getting way ahead of ourselves. But the main thing is that bear markets for Bitcoin have seen drawdown reduce year over year. There's more demand. But I don't care what people say. I totally expect Bitcoin to enter a bear market whenever it reaches its top this year, which I think it makes the most sense. So top in November of 2025, bottom in November 2026, maybe at around 30K. But we'll just have to wait and see. But you got a lot more than you really wanted to know.
No, I love it. And I only have one question though, Aaron. Do you believe then? Because like you were saying, like we've seen less and less drawdowns, because I'm sure that's one question that some people are going to have, whether or not they type it out or not. I'm sure it's one that comes to mind, because we've all heard, like you said, Aaron, that with each successive bear market, the drawdown has been smaller. So why do you believe that this drawdown would be, I guess, like a little bit on the larger side, let's say? And do you believe that the length of the bear market itself would be longer? I'm curious to know that.
It's wholly dependent on if we actually go into a recession. And as we discussed at the beginning, knowing that Donald Trump was a businessman, whether you guys like him or not, he does have quite the portfolio. He's done really well financially. I mean, it's okay. With all of that aside, or rather, let me say it differently. With all that in mind, knowing that he's a businessman, it would be really weird for a business-centric president to be in office during a recession. It would just be a very, very strange clash. So I keep kind of hearing, you don't have to worry about me, but I keep hearing these thoughts, or like keep thinking these thoughts of like, it's going to get worse before it's going to get better. And I just kind of have this gut feeling. So thinking about the market right now, if things were to crash, I don't think they're going to go below 73K personally. And if they do, we're cooked.
I agree.
But I don't think that Trump would really want that to happen. Not just for crypto, but also for the stock market. Now, in regards to diminishing downtrends, I guess you could say, or diminishing, whatever, how far we'll go. Knowing that more and more companies are buying up Bitcoin, we know that countries are buying Bitcoin. I imagine that it probably won't exceed 80%. But if we go into a recession, like many smart financial minds are hinting at, like Ray Dalio and other people, and they're paying attention to lots of really smart metrics. If we do, and we have another like 1929 great crash scenario, then oh yeah, Bitcoin could go a lot lower. It's totally possible. There's no reason why it couldn't. But
So
I
then,
don't expect that to happen.
in that case, Aaron, I have a third question, and I'll leave it at that. Because I actually share the same thesis that you do, not necessarily in terms of how low Bitcoin could go, but that there's a risk that we would enter a recession and that this would cause like a pretty significant drawdown and potentially a lengthier bear market. But whenever I mention that, the number one question that I get is like, okay, well then how can you be, if the recession is coming, why isn't it priced in, and how can you be bullish now? How can you say that there's going to be a rally up to 175K? I'm not the one saying that. This is just the question that I get because I have basically the same view that you do. And the question that I always get is like, well, how can you be so bullish now if you think that a recession is coming, let's say later this year, starting later this year at the earliest, or sometime next year? How can you believe that we're going to see another rally higher, basically in the coming months? I know it's a little bit of a weird question, but you know.
I know what you're saying though. Statistically speaking, we've seen extremely bullish end of year closes. Last quarter is typically really bullish for Bitcoin, whether it's a bull market or a bear market. Obviously, when it's a bear market, we might get rugged and it might not do so well towards the end of the year, like we saw in 2018. November is when it really lost the floor of 6K and it dropped to 3K. If we zoom ahead to 2022, it started to move up in October and November, and then unfortunately the FTX fallout, the bankruptcy crashed Bitcoin down in November. So, but that's something that happens, and again, it's 4 years apart, 2018, 2022. So that's why I'm also thinking 2026 makes the most sense if we could actually time out a bear market bottom. But the reason why I think the price will go up and eventually will top out is because I think it's a mix of group psychology and group expectations. I didn't really want to see the camelback top that we saw in 2021. All metrics point to March 2021 being the top. November was just a very gentle gift that was given to us. That was the exit bounce, but many of us didn't recognize it, including myself. So the reason why I think we could, or rather we should see Bitcoin return back up and actually surpass the 109K high is because it happened before. Therefore, people believe it's probably going to happen again. I know it's really lame, but sometimes the simplest explanations work out to be the actual end result.
In other words, you're just saying, just based on the historical cycle, it should have another leg higher.
I don't like that idea. I would much
rather. That's exactly what I say.
Yeah. But given this price action that we've been watching, it's like there's no excitement. There's no volume. Retail isn't here. Retail got in too early on Solana and all pump fund, and basically they blew all their money. So if Trump is trying to force the Fed's hand by causing a lot of short-term pain, then maybe they're going to change to quantitative easing. I don't know what his plan is, or if he has a plan in that direction. But once that happens, I do believe that the markets will reverse, and I believe the markets will get euphoric again. But there's also lots of other signs flashing on the S&P that I'm watching that aren't good, where it wouldn't surprise me to see the S&P enter in a bear market. I don't know if that's going to have a direct impact on Bitcoin. We also know that gold is pumping a lot too, which is also a very it's actually not a great sign to see gold pumping. I know it is for all you gold bugs out there, because it's great to have gold and see the price go up. But knowing that gold is pumping means that financial markets are in distress, or there's geopolitical tension around the world, right? It's a flight to safety. So
yeah, no, it's interesting. And on that note, Aaron, do you mind if I share then some charts of interest rates, and then you can show us the DXY like you were promising me earlier?
Yep. All right.
Yeah, here I'll share the. So I'm actually going to start. I know I was telling you I would show you the 10-year, but I want to start with the 2-year. Can you see the screen?
Oh, there we go.
Yeah. So this is really interesting. This is a trend line that I drew out, believe it or not. I think it was about a year ago, and I was basically so I guess for a little bit of background for people who are unfamiliar, the 2-year yield on government bonds. On U.S. government bonds is basically a proxy for short-term interest rates, like the interest rates that the Fed sets. For a long time, there's kind of like this belief that whatever the 2-year yield does, that the Fed follows. Like a lot of these macro guys, once upon a time, they would say it's like the Fed isn't really in control. It's a 2-year yield that's in control, and whatever the 2-year yield does is what the Fed will follow. And what's interesting is that the 2-year yield now is below the Fed's interest rate, which I believe is like 4.25, 4.5 or something like that. I don't know. Point being is it's somewhere in the 4-handle range. And the 2-year yield is below 4%. So the 2-year yield is basically screaming at the Fed that you need to start cutting rates, which is what these macro guys would say, right? Which is really interesting. And then just zooming out, like I drew this trend line, which, you can, I mean, I'll just be straight up as I'm not like an expert trend line drawer, but the point of this trend line is just to highlight the fact that, look, like we can see kind of like a topping structure forming here, some kind of like a weird, bizarre combo between like a double top and a head and shoulders, right?
Yeah.
And you can see that it's going to break down, and literally just doing basic level analysis, like we're looking at a level that would fall somewhere around 2.5, maybe between 2.5 and 3% range. And this is something like I said, I've been watching for over a year, and I'll actually see if I can switch. I'll show one more chart real quick, Aaron, if that's all right.
Yeah, totally.
So that's one thing I've been watching. And then the other one that I've been watching here, I zoom, maybe I'll just put it on the weekly here just for the, just to make things a little bit more visible. So similarly here, this is also, this trend line is a little bit newer because I wasn't actually looking at the 10-year yield a year ago. But over the last, I would say, I don't know, 6 to 8 months, I've been paying a lot closer attention to the 10-year yield. And you can see that just like the 2-year, the 10-year yield is falling. And this is something I think, Aaron, that you and I had mentioned in the video that we did not long ago, is that when there's confluence between different levels and stuff, then you can see like, okay, then it kind of makes sense, right? In this case, there's confluence in the sense that the 2-year yield, basically the 10-year yield trades roughly 1% above the 2-year yield. So if we say that the 2-year yield is going to fall, if the chart is showing that the 2-year yield is going to fall somewhere to 2.5%, then this would translate to a 10-year yield of somewhere around 3.5%, which again, like, the trend line's not exactly perfect. You could probably adjust it and whatever. It's like, you have to measure on the wicks and not the bodies and blah, blah, blah. Like whatever, just forget about that. Just the point being that to get a rough range here, that we would see that the 10-year yield fall to somewhere around 3.5%. And not only is that respecting this trend line, not only is that consistent with the 2-year yield, but even just based on very basic support resistance, you can see that there starts being some support somewhere around 3.6%. So somewhere in this range of 3.5 to 3.6% is where I think the 10-year yield will fall. And I do believe that's going to come actually like probably over the summer, even in the next month or two, probably in response to falling inflation and in response to to rising unemployment or just some economic weakness. The last thing I'll say on this is that whenever I say interest rates are going to fall, everyone says like, oh, but does that mean a recession is coming? Because if you look at the Federal Reserve's history of changing interest rates, they would only lower interest rates when a recession was starting. But in this case, the thing that's really, I guess, unique and interesting, I mean, not saying that this time is different, but one thing that is interesting is that when you have market conditions like where you have slowing economic growth and weak inflation, that's not necessarily recessionary, then that's enough to kind of get the Fed to cut rates without creating a panic. And this is kind of the situation that I forecast over the summer that I think is going to drive a recovery in crypto. And I personally believe that the cycle top will be in before the fall. I know it's a little bit of a bold claim, but I think that we could see the levels you're talking about, Aaron, by like September timeframe. But I won't get like too much into the details there unless you want me to. But anyway, like I do see that the 10-year yield is going to come down, 2-year yield is going to come down. This is going to be supportive of risk assets around the margins, assuming that we're in a risk-on environment. Which again, like the main reason why we've been in risk-off is because of tariff fears, and I think it's almost guaranteed that those tariff fears will be gone by May. Like we should have everything resolved. Like come on, like he showed us the sign with all the stuff. Like that, there's the final product, and then now we just have to wait and see how countries respond. Once we have that clarity, then people will turn their focus to recession, inflation coming down. Oh God, the Fed has to cut. The Fed will cut, and then everything's going to rally. That's what I think is going to happen. But anyways, guys. Aaron.
No. It's all good. And I mean, I think that's really important too. I mean, we're the Coin Bureau trading channel. We talk 99.5% of the time about crypto, but we do need to be aware of what's happening in the big boys room, right? Yeah. That sounds weird. We need to know what's happening at the adults table because we're all at the kiddie table. Let's be honest. If you're trading a coin called Fart Coin or Moodang about this hippo that looks hideous, by the way, let me be the first to tell you all the truth. That's an ugly hippo. We need to know what's happening with the big boys club. And hearing that and seeing the charts, totally looks like a weird, it looks like a cowboy hat, to be honest. One of those weird ones with like the little divot in the middle, but it's a double top Head and Shoulders, which I've never seen that before. I do want to talk about some TradFi charts in regards to like what's happening, especially like the VIX and the Dixie right now. So I'm going to pivot over to my screen. Here we go. Okay. So I've been watching the VIX, which is the volatility index of the S&P 500. Of course, it's pumping like crazy right now. It was up inside of this. Let me get rid of this because it's a little bit easier to see without it. So this is loosely called a rejection zone, just because we've seen the VIX get up to this zone from about 21 up to really up here to 64, but that's a very rare pump, right? So it's getting closer to the top. The main things that I'm watching here is that, yes, there's a lot of short-term pain right now, and I'm also watching daily RSI. So we have this local high here on the 27th at 80. Just north of 80. If we continue to see more fear in the S&P, then of course we're going to see the VIX go up higher and higher. But the odds of it reversing from here are much greater than a chart like this continuing to pump. Now, this pump over here on the 5th of August, just so you guys know, and again, we're talking about some TradFi stuff. I need to pull up the other chart. The 5th of August is when we saw the Nikkei do this incredible flash crash. There was a massive, massive dump on the 5th, and seeing the Nikkei, which is the Japanese equivalent of the S&P, dump over 4 days, 22%, and even in 1 day, falling 15% is a massive, massive move. So the reason why we saw an increase in volatility for the VIX is because we saw S&P futures as well in that same time also dump, because they're somewhat correlated, right? Over the same period, we saw over 4 days, the S&P lost 8%, while we saw a much bigger move from the Nikkei. Now, speaking of those two and talking about volatility, yes, we're seeing the S&P futures chart right now down. It's gapped down a little bit. It basically looks a lot like Bitcoin's price action, where it started off kind of okay and then it dumped and it keeps on dumping. It's at RSI-based support. It's not a pretty picture. It's starting to flash some bearish signs. This yellow dot right here is TBO breakdown, meaning that we could see continued explosive downward price action. We could. And just to prove that sometimes this actually does work, it's not just mumbo jumbo. Looking at the Nikkei, we literally saw 3 of these this week, Monday, Tuesday, Wednesday, before the Nikkei crashed about 6%. And some people don't really bat an eye at 6%, but for a major, like a world leading index to crash 6% like this in a day, it says a lot to me. Another one I need to start tracking a lot more of is the Hang Seng Index, which is basically the Hong Kong index. So this one did gap down, but it's not dumping as much as the Nikkei is, and definitely not anywhere near as much as the S&P is experiencing volatility. But this is important. And all of this starts to affect other things. The Dixie, the US dollar index, is doing the unthinkable right now, at least to me. Seeing it down right now on the news of this, knowing that this falling represents a weakening dollar, which is why we're seeing like the euro up 2% and also the yen against the dollar is losing 2%, which means that the yen is strengthening against the dollar, so is the euro. This is weird. And I know for a fact that Trump would not like this. The man who said, "Make America great again," doesn't want to see a weakened dollar, right? But this is wild to me. I don't think that the pain is necessarily over, but this is very much a very strange market reaction. Now, the last thing that I've been paying attention to that's even wilder, I don't know if you caught this, gold is dumping today a lot. And again, this is gold, so it's a much more tame chart. Gold has been on a very significant rally, really ever since it broke $3,000. So right around here. And it moved all the way up 5% to 31.67 or so. The fact that it's dumping the fact that it's not just the VIX that's pumping, which shows an increase in volatility. We're seeing the S&P dump. We're seeing the Nikkei dump. We're now seeing gold dumping, and silver is down 6% today. Silver trades like a meme coin, but this is a very significant dump for a precious metal. I know there are lots of people that like risk on assets, and I wouldn't say that silver is necessarily a risk on asset, but like, guys, like that's a little bit concerning. So to wrap all this up, I'm seeing fear. 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 And then we have Bitcoin.
Yeah, looks fine.
Right? This brings us full circle to what we talked about. Yeah, I know it's down a little bit today. It could fall further because people are waking up and they're seeing everything else crash. But if we compare all those charts, the fact that it's not dumping more than this right now, it's literally mind-boggling to me right now. Now, please, I don't want it to go down more. Like we've already had our share of like bearish vibes, but again, it's crazy. I see a comment real quick, just caught my eye from Eek. Eek Poo. Gosh, why do I say this? People are selling gold to buy risk on assets. You know, I wouldn't be surprised because we see an asset making all-time highs and going up higher and higher and higher, like gold was. And if people were actually paying attention to the most important thing, which is volume, and volume has actually been falling on this. And yes, it's been moving up. There's another chart that I've been watching as well, but volume's been falling as the price is going up. There's some things you got to pay attention to here. I think gold should still recover, but let's be honest, let's be real. That's a lot of profits to be made, especially if you bought gold. But even back down here, like not a year ago, but well, a little bit over a year ago. No, I can do math. It's okay.
4 months.
But anyway, I just, it's like what we talked about before. There are just too many weird things happening, bearish things happening, and Bitcoin is just like, meh, I'm good. It's like, it's wild, man. It's weird.
The only thing I guess is, and I'm sure that some people will be commenting, well, it's like, well, for me, it feels more painful because I hold altcoins and my altcoins are down more or whatever. But even with the altcoins though, and I guess we can take a look at a couple of charts there. Even with the altcoins, like, yes, it's bearish. And I guess here, I'll actually, maybe I'll share, I'll share my chart here on Ethereum. It's like, yes, it's bearish. I don't have any like special insights per se, but like, yes, it's looking bearish. But the thing is, like, I'll actually start here on the daily. If we look at, you can see the chart? Sorry,
hold on. I have to remove mine first, then I can add you.
Gotcha.
There we go.
I'm good?
I think so. Yep. Oh,
okay,
that's
cool.
you. Yep.
So here we're looking at Ethereum on the daily, which again, it looks scary, but you know, with the Bollinger Bands, of course, the outer range of these bands kind of tells you like the outer range of price action that's normal in terms of volatility. And like, even though, yes, Ethereum is down more than Bitcoin, same is true for Solana, same is true for many altcoins. If you actually slap on the like literally go and try this, like slap on the Bollinger Bands on the daily and then take a look, is like, is it really like completely puking out of this range? Chances are the answer is no, which again, to your point, Aaron, is like, even though, yes, like altcoins are weaker, they're still holding up better than a lot of these assets that you were shocasing, like silver and all this stuff, like on a relative basis, right? Of course, silver being down 6% versus whatever, but it's like, this does not look like Ethereum does not look like silver, right? It's not like completely puking lower. It's like, yes, it's had like another move down, but it looks fine to me. And of course, I mean, zooming out to the monthly on a Bollinger Band moving average doesn't look too pretty here. It's like, on my own criteria, like Ethereum is just, it's technically re-entered kind of like almost like a bear market. But besides the fact that Bitcoin is still holding up above its Bollinger Band moving average on the monthly, the thing that I've been watching as well, of course, is this, and again, I don't know how big of a fan you are, Aaron, of candlestick patterns, but 3 stars in the south, it's one of my favorites. Where you're seeing this basically, like, even without checking, well, I mean, maybe I could throw on the volume here just to take a look, just out of curiosity. I guess kind of. I was going to say, like, even without checking volume, I can kind of see that I mean, you can see that I mean, of course, we're still a little bit early in this month, so we can't say for sure, but it does look like the selling volume has been declining over the last few months. I mean, we'll have to wait and see at the end of this monthly close, but without even
Oh yeah,
checking
it
the
has.
volume,
Yeah.
without even checking the volume, I can just look at this chart, and because of this candlestick pattern, I can tell the selling volume is declining, right? Like the selling momentum is declining, and this is typically a sign of a potential reversal. Not this month, like maybe not this month, but potentially next month. And I do think that ETH, will get a rally to this Bollinger Band moving average on the weekly, as you were mentioning earlier, Aaron, with the Bitcoin rallying up to 93, 94K. That could be accompanied by, I mean, assuming that altcoins follow suit, it could be accompanied by pretty sizable altcoin rally, like 40, 50, even 60%, which would be pretty mental. And that would kind of foreshadow some kind of significant easing around like interest rates or something like that. And it would be really funny if that actually did happen, especially now as I'm speaking and the price is just grinding lower. But then next week it's just like, pops. I don't think, I mean, we'll see if it's next week, week after, who knows, but to see a bounce sometime this month, I think is definitely in the cards. But I guess I'll leave it at that, Aaron, and keen to get your thoughts on any altcoins you've been watching that you think you're concerned about. I know you mentioned Solana. That was. Do you have any charts on that?
Yeah.
If you have it handy.
I mean, we were so close so many times. It's not fair. Solana was trying its best. It's like if we were in the South, I'd be saying, oh, bless your little heart. But I mean, breaking above this resistance level is getting so hopeful for it, especially at 147 a week ago. And then to lose all that ground, pump a little bit yesterday, and now it's going back down. If it loses support here, this low at 112, then it's not going to be pretty. I mean, we need to zoom out, but I mean, this is support right here. If it really starts to go south and it loses 110, then yeah, it's time to put some deep orders and buy. And of course, the market's starting to dip a little bit more as we're talking. I guess we have a negative influence on the market. But seriously, it's how is everyone waking up in the US responding to what's happened overnight? They're probably panic selling, probably closing out of positions. That's my expectation. Yeah. When I look at this though for Solana, I mean, the problem with stuff like this is that breaking a support level like this and you're still trying to hold on to hope, you start entering this slippery slope phase. Let me change this to a weekly chart instead because it's a little bit easier. So like here, it takes forever to zoom in, doesn't it? If we lose this level, then a lot of you that are holding Solana will be tempted to go, okay, well, it lost this level, but what about this level? It's going to hold this one and it loses that one. Okay, what about this one? And what about this one? I think more of us, or I'll say more of you, I learned this lesson long ago. Once a critical level is lost, that's a really bad sign. For all of you that watched my video about Ethereum, and I said this pivotal level here at about 2150, and I said if the price of Ethereum loses 2150 or 2100, it's not pretty. Things are going to go worse. And what's happened since then? Ethereum has lost all that ground and it continues to grind lower. It's now 17% below that level. You have to understand that when significant price levels are broken, prices usually don't just bounce back from that going, it's okay, I'm fine. It's like, no, you're falling off of a cliff and you're landing on your face and you're breaking your spine. You don't just get up from that. Same reason as I'm looking here and I'm saying, 73,777, if this level doesn't hold, it's not going to bode well for BTC. It won't. But with that said, too many charts right now, as we are seeing blood fill the charts, too many charts are just massively oversold. There are some dangerous ones, and I saw we got a request for Sonic. Yeah, I actually want to look at Sonic 2 for myself because I entered a trade on it. I want to see how it's doing. It's probably not doing well. Yeah, here we go. Oh, of course, no. Yeah, it's terrible. Let's go to the daily chart. Okay, so with a chart like this, again, same concept applies. If we want to be so bold to say, okay, we have a support level here that we could probably say, oh yeah, this holds. And when the price does something like this, breaks support, comes up, wicks into it like this, doesn't break above, this is your chance. The market is usually very generous to say, I'll give you one more shot. You want to get out? Nope. okay, here we go. Hold on, hold your breath. And then, so like we get a level like this where we kind of have, okay, so maybe someone doesn't want to draw the scam wick. Maybe we want to draw this. So now Sonic is at a very, very bad spot, because if this level right here at about 42.81 doesn't hold, if we don't get a bounce from here, what will most likely happen, and usually happens on charts like this, is we'll see the price break below, come up the next day to test, and if it doesn't go right back above, it will most likely respect that and fall lower, just like I shared up there. But the opportunities are still very much available to us. If we start breaking significant levels, if we start seeing charts actually dump a lot farther, go deep, go real deep. It's actually not a problem to set some really, really juicy buys that are 25%, 40% below prices, because when we get market scares and market panics, similar to what we saw like back in August 5th, like I shared that chart before, like we'll look at XRP, right? And this is going to be pre-pump XRP, but going back over here to August, when we get these, consecutive dumps like this, usually these dumps are going to eventually be exhausted. Yeah, 34% move over 5 days is disgusting. But look what happens after that. Eventually, we're going to see the prices rebound. If there's going to be a single day dump that happens, that's a gift, especially because we typically see markets rebound. Now, it's been a while since we've seen some significant green from XRP, like continued green. But we also have to remember, where has XRP been for pretty much the last 6 years? It's been about 50 cents. So the scary thing, again, talking about scary stuff, if XRP loses this level here after this crash on February 3rd, $1.77, if it hits this and doesn't bounce from here, there's a massive problem, because this is a massive liquidity zone that we should definitely see filled, and eventually it'll be a very painful, long drawdown. I'm not trying to make everybody throw on a pair of Depends while watching this live stream and to freak you out, but seriously, we need to respect these support and resistance lines, and when they're broken, stick to your plan. If your plan is to exit when a level, a very, very strong, significant level is broken, then just cut the rope, get out of the trade. It's not worth just holding a losing position if it continues to dump, if the markets continue to fall. Now, with that said, yes, I wholly believe that we are still short-term oversold. We are still short-term oversold all over the place, which is why I think it makes way more sense to see the market actually go up, to see Bitcoin go back up to 94K. I just keep going back to that. It's like an odds thing, right? It's like it just can't keep going. It's unrealistic to me.
Yeah, I completely agree. Like, especially like there has to be at least some kind of relief rally somewhere in there, right? It doesn't just go down only, just like it doesn't just go up only. There has to be, it's a staircase up. Of course, sometimes you get like you'll have like a couple of days of up only or down only, but I mean, in the time frames that we're talking here, like days and weeks, it tends to move a little bit more, let's say, gradually. Yeah. But Aaron, I'm curious, because I'm sure it's another question that I've gotten, and maybe it's one that you've gotten as well. And I'm sorry to like put you on the spot or anything like that, but I'm personally genuinely curious. What do you think is going to be the catalyst then? Like you're calling for like a potential rally up to 94K on Bitcoin. I also think it's going to happen, and I'm actually thinking in my mind, it's like, what could be the catalyst for that? Do you have any ideas off the top of your head? And while you think, maybe I'll think too, and we'll both be just like.
I'll tell you what it's not going to be. It's not going to be Michael Saylor buying Bitcoin. Yeah. It's not going to be Nayib Bukele buying Bitcoin. It's not going to be a Bitcoin strategic reserve in the United States. It's not going to be, what country is it? Bhutan mining Bitcoin. Yeah. I think we've all been duped, including myself. We've all been putting way too much emphasis and pressure on these big names and nation states buying Bitcoin. You would honestly, like 4 years ago, if we had news like this, the price of BTC would pump like crazy, absolutely nuts crazy. The only thing I can really think of at this point for the narrative to switch quickly, or rather to see that 176K target happen, it has to be a macro shift. Bitcoin is, even though it's extremely risk on asset, but because it's a risk on asset, if the Fed switches from quantitative tightening to quantitative easing, then we're going to see that shift move into risk on assets. And Bitcoin is definitely risk on asset, and a risk on asset. Right now, I think everything is pivoting on the Fed and what they're going to do. How are they going to respond? How are they going to react? And I think Bitcoin will follow suit. Because we've seen that nation states don't do it. Strategic reserves don't do it. Companies and corporations buying Bitcoin doesn't do it. It's great for their stock. It's great for, the rapport, and they get some cool points. They get to wear a cool Bitcoin B, or they have laser eyes on their profile picture on X. But is it actually benefiting the price? Not really. So I think we're now, unfortunately, at the mercy of Jay Powell, which defeats the entire purpose of the whole experiment. My God, this is so stupid. Bitcoin was created to be an exit strategy from the traditional markets, not so that we're all looking at this old white man with this weird chin saying good morning, and then all of a sudden we lose like half our portfolio in a day. Like, this isn't how it was supposed to be. But when BlackRock starts buying it up and they start controlling the markets because they can push in the direction they want, well, there we go. Now we're kind of at their mercy, unfortunately.
I was always thinking, because Jerome, when he does that speech that you were saying, is like good morning or whatever, or good afternoon. Good afternoon is what he says. When he comes up on stage with the binder, I'm always wondering, I'm like, what's in the binder? Imagine it's just like blank pages of nothing. He's just like talking at it. But anyway, in all seriousness, though, I do think, Aaron, I think you're right. Basically, what you're saying is that any crypto-specific announcement is probably not going to move the needle. It'll need to be something macro-related. The only one that comes to mind for me, like, I guess the closest one would be the unemployment rate this Friday, but I'm not sure that would have any effect. But the one thing that could do the trick is if we do see inflation come in next week, and that inflation print, which I think is on, actually, let me pull up the schedule here. I think it's next Wednesday, next Thursday, sorry, April 10th. If we have the CPI come in and it comes in lower than expected, which like real-time inflation gauges, like by a Truthflation, I don't know if you follow those guys, they do like real-time inflation tracking, and their model is showing that we should see a significantly like lower than expected inflation print next week. I think that would be the catalyst that triggers it, because obviously people would start pricing in that the Fed is going to cut rates in response to that lowering inflation or falling inflation. So they would kind of price in, like you're saying, like we need the Fed to do something. If inflation does come in lower, then people would start pricing in the Fed potentially doing something in response. And depending on the conditions of the time, that could be enough to trigger a short squeeze. And then maybe we get some announcement, or even just in general that people are paying their taxes now, that by the middle of the month, the initial move is just a short squeeze, but then the kind of like continuation of the move is people have money now because they paid down their taxes, or they got money back, right? They got tax refunds. Some people, yeah. Who knows? And then they put that money into crypto as well. I mean, obviously that stuff around the margins is probably not going to move the needle. But for my view, I guess the biggest one would probably have to be that inflation print next Thursday, or the unemployment this Friday, which I don't think it's probably not going to have any effect. Just as long as it's not bearish, please. No more.
Seriously.
Yeah.
Yeah. Well, we're almost coming up toward the end of the stream today, guys. For one, thank you for joining us. Thank you for all the fantastic comments that I'm seeing in the chat. For better or for worse, I know I see a lot of mixed emotions and feelings in here. People are like, no, yes, dump lower. But the idea behind this right now is, guys, you gotta chill out a little bit and zoom out. Chill out, zoom out is going to be your best bet moving forward, because any decisions that you make based off of fear and panic will bite you in the butt, which is like I was saying before. Whatever happens over the next 24 hours, we could see another flash crash for crypto. Crypto could go lower, unfortunately. But statistically speaking, we should see a recovery. It should be coming. There's a lot of short-term pain for potential long-term gains. I've been in this spot before. Dan and I have both, just so you guys know, we're not new to this. We've both been trading, at least in crypto. I've been trading for 10 years, or 10 years now, which is crazy. In crypto for, doesn't matter, like 7 or 8. And Dan, you've been in crypto since 2016, I think you said?
No, I got into crypto 2018, but if we want to classify me in terms of like actually like watching charts and doing technical analysis and stuff, probably since 2021. So let's say 4 years.
Yeah. So we've both been through the ringer, and a lot of you watching have as well. Think back to the COVID crash. Think back to more recently, the August 2024 crash. Think back to the FTX fallout. Think back to all those opportunities, or rather you didn't see it as an opportunity, but all of them were opportunities to buy the dip, depending on the time frame. And what are you going to do? Are you going to stick to your plan? Are you going to sell on the bounce? All that stuff. But the worst thing you can do is to make a panic-induced decision when the markets are starting to look not so great. Plan out your trades. Look at your portfolio as non-biased as you can. If you have a significant other and you feel comfortable sharing amounts with them or numbers, and say, what would you do? To be honest, a lot of guys trade because guys are okay. You know, guys are all right with being risk adverse, but I've also read that statistically women are better traders because they're better at taking losses earlier and taking profits earlier, whereas guys are like, no, man, let's just keep it going. Like, let it ride. So it's okay to consult a trusted significant other. But that's up to you. It just depends.
My significant other just says, don't talk to me about it. You're the one, you deal with it. So,
like, no, I need your help. I see one quick comment from Arya that I got to answer. On a so their question is, can you share your opinion on a low leverage 2 to 3x BTC long for the next 6 months with a stop loss around 68-70K as a safe 2x strategy? No advice, just opinions. Well, the opinion would be advice for one, but I'll let you take a stab at that. I already have an answer for it in my head, but I think I talked a lot just now, so you go ahead.
Does it have to be a 2 to 3x leverage? Well, sorry, what's the goal? They're trying to 2x their money in the short term?
Yeah, I think the idea is to take a low leverage position because there's less risk on the table compared to like 5x, 10x, 25x longs and stuff like that.
I'll be completely honest. I think at this point in time, and again, maybe this is a controversial take, but I think at this point in time would not be Bitcoin, but Ethereum. Like, Ethereum is just so ridiculously like guttered. And I know like Aaron's like, geez, how dare you recommend this? But I personally believe it's like, you know, if we're talking not necessarily in the next few weeks, but I mean, earlier we were looking at the chart, right? Just based on my analysis, which of course a little bit different than yours, Aaron, like looking at the Bollinger Band moving average on the weekly. When I was going earlier today and I was looking at this stuff, like even earlier this week at all the different altcoins, Ethereum, like relative to where it is now to the Bollinger Band moving average on the weekly, the gain is as big as like a smaller cap, well, not like a small cap, but as like a mid cap or like a smaller large cap, like something like Hedera, like basically like the ROI on ETH from this level, in my opinion, looks pretty good. Which again, you would be making a pretty risky bet, as you were saying earlier, Aaron. It's like falling below that 2100 level. Even I think I'll actually check the chart because I'm pretty sure that even the Bollinger Band moving average on the monthly was around. On the. Am I looking at the different time frames here? Interesting. No, I must be looking differently. Okay, forget it. Doesn't matter. Point being is that yes, like even I look at the chart and I'm like, this does not look good. This does not look good. This does not look good. But at the same time, it's like, you know, there's that part of me that's like, you know, Trump is buying Ethereum. All these institutions are tokenizing assets on Ethereum. The one thing that a lot of people are missing is that stable coins, like those stablecoin bills are probably going to pass. I mean, maybe not by the end of the month, but word on the street is by the end of this month or or May, we'll see the stablecoin bill launch. And like, where do all the stablecoins go? They're all on Ethereum. JP Morgan, according to an interview with some tokenized real world assets guy, he was saying that JP Morgan is planning on launching its JPM coin on Ethereum as soon as it can, as soon as it's legal. So it's like you have the catalyst in play, but of course that assumes that the macro is bullish.
Yeah.
But if you have this, like in my view, the main thing that's been holding back, and this actually ties very nicely. Sorry to go on a tangent here, But this ties in very nicely, Aaron, with what you were saying in terms of, like our discussion regarding what would cause the crypto market to pump. What I think it could be, again, is like potentially inflation coming in lower than expected. If that happens, and of course, interest rates, the expectation of interest rates that they would be cut, those expectations would go up, meaning like people would think that the Fed is going to cut more. And from my view, the main reason why Ethereum has done so poorly, a lot of people say it's because of QE or QT or whatever, or I guess because of QT specifically. I personally think it has more to do with short-term interest rates, because Ethereum, in my view, is more like a decentralized bond. Like because it earns like a staking reward, and it's kind of like a high risk asset that you would hold on like a shorter term basis. And in the context of crypto, Ethereum acts more like a bond, so it makes it more analogous to something like a basically like a bond, like a government bond. So I think that big if to whoever's asking this question is like, just wait and see, I guess, like next week when that inflation print comes out. If that does come out like more positive than expected, then that's a scenario where altcoins would outperform Bitcoin, especially Ethereum, given how beaten down it is, where you could have a pretty nice opportunity, for a pretty decent, move in the short term. Whether or not that would bring it back above that 2100 level that like Aaron outlined earlier, that's a whole other question. But for it to rally back up to that level on the back of a lower than expected inflation print, and because everyone's going to think, oh my God, interest rates are coming down, you're going to see altcoins rip like crazy, or I mean, assuming that comes in, right? And Ethereum, on a risk reward basis compared to other cryptos that I've been analyzing, Ethereum looks really good right now. So anyway, as a short-term trade, not financial advice. This is just, I butchered. I know you were saying like, please give me a safe bet, please give me and I'm here giving you like, yeah, why don't you catch this falling knife over here?
Yeah. I'm glad you have that perspective. I'll address the question about a BTC long, because personally, I think an Ethereum long, statistically, it should go up, but there ain't nothing good about Ethereum right now, in my opinion. But as far as taking a long on BTC and holding it with the hopes of a 2x strategy, for one, if you're taking low leverage, yeah, okay, you price for a long would have to drop, I think, around 40% in order for you to be liquidated. So there's very low chance of that happening. And if you have a stop loss in place, okay, that's good too. But if you're trying to get a 2x with 2x leverage, that means the price has to move up 50%. If you think about how long it takes for Bitcoin to actually move up 50%, it ain't going to happen in a month. That'll probably take 3 to 4 months. What people don't realize when it comes to leverage trading is that you have to pay funding fees that renew, depending on your exchange, every 8 hours to 12 hours. So you're actually going to be paying a lot of money to hold open that 2x long on an exchange. With that said, leverage trading is really meant to, and I'm going to kind of contradict myself, but it's designed to hedge your portfolio against drawdown. So like taking a short on BTC at 100K when it lost that, but holding Bitcoin, but shorting it with futures, that's the whole point. Yes, you could be holding that short position open for a long time. You're still going to be paying fees for holding it open, but holding a position open for a long time just to hit a magical number is really risky. Really, the purpose of leverage trading in crypto for me is about looking for these smaller gains using 10x leverage, which sounds crazy to some, but looking for a 1% move to make 10%. That's really where I think leverage with crypto works best, is a quick in and out. So I would just exercise caution. I'll tell you what I'm not doing. I'm not doing that. So hopefully that makes sense. If it were me, I wouldn't be doing that. If it's me, and you're looking at or considering a stop loss around 68 or 70K, I would instead, if your fear factor is telling you, well, it could go down that's the lowest I would want to lose, why not just enter there just in case? Or why not just scale into a position, buy a little bit here, buy a little bit more if it falls down to 73K. If you want to go down to 68, then buy a lot more down there, right? But there's a lot more risk with leverage trading than people realize, especially holding positions open for a super long time. That's just my my thoughts on it. I think we got to cut it. I think we're over time, but it's good though. This has been a really great conversation. I'm seeing lots of really awesome feedback from you guys too that have joined us today. That you're like, you guys, why aren't you doing this all the time? We're in 2 different time zones and both busy people, but you know what? Maybe we should do this more regularly, at least like once a month. I think that's an easy no-brainer. So yeah,
I agree.
Well, if you guys haven't already subscribed, slap yourselves and hit the subscribe button. Like the video, leave comments, share this with others. Even though this is really actionable content that's happening right now, everything that we've shared and we talked about today, completely, you could recycle all that information for future occasions like this. There will always be another dump, and everything we're sharing right now is completely valid. So, not to say that it's invalid, but it's valid for months to come. So understand that there's a lot that you could be learning from these live streams, especially from Dan's knowledge and from a little bit of my knowledge. There's a lot that you guys can be taking. Hopefully you're taking notes on this stuff and don't think, oh, this is a one and done thing. Just rewatch the live stream because you might have missed something. You're like, wait, why did he say it? Why does he think that? Why not that? Just rewatch. Just trust me. You're going to be learning a ton through these live streams on this channel. Okay. Dan, any last words?
No, just, I know times can be tough now in the crypto market, but you got to just, put your big boy pants on and just take it. I know it's horrible to say, but like, seriously, like there's no pain, no gain. The gains in crypto can be incredible. And on the flip side of that, there's incredible pain. So, for me personally, it's like, I have many altcoins that are down bad, like many people who are watching. But I'm not concerned in the slightest. I'm just sitting and waiting. Like you have to when you have a thesis, you have to stick to it, right?
Yeah.
And don't let the short-term price action or even medium-term price action for that matter, mess with your head too much. And like of course, like when levels are violated, then you have to start paying attention. But I guess just understand, for yourself, and I guess now it's becoming a long last word, but for yourself, like just set a level. It's like, where do I really think it's over for real? Okay. You know what I mean? In your case, Aaron, you have that level around 73K. I guess for me, it's closer to around 70K, roughly in the same neighborhood. We're neighbors. Good enough. You know what I mean? But literally, like have a price level in mind where you think if this crypto goes below this level, I have to call it a day and I have to walk away, with whatever gain or loss that I have. And you have to have a plan basically, and you have to stick to it, right? Not only have a thesis, but also have a plan. Actually, like in terms of specifics, it's like if this doesn't happen by X date, then and that type of stuff. And if it goes against you, then you can always try again, right?
Yep, absolutely. Dan, you're awesome. Thanks, buddy.
Yeah, likewise, man. Thanks so much.
All right, and until the next time, you guys know what to do. Stay awesome and stay in the green. Peace.